the other. This is the textbook definition. Now, this is where you're going to get one asset and exchange it for the other. This is exactly what happens in the markets. You're exchanging one asset digitally for another one. Now, you're not actually holding these assets tangibly, obviously, because they are digitally, which gives you a major advantage to leverage that in your favor and make a living out of this. And this digital version of trading is actually in many markets. You have it in Forex trading, you have it in gold, you have it in commodities, in currencies, you have it in futures. There's many different types of digital forms on how to actually make money from the markets in trading, where you are doing pretty much the same thing on all different types of trading platforms. You're pretty much buying one thing, exchanging it for the other for a profit, or you're selling one thing, exchanging it for the other to make a profit. You can make money if you buy something in trading and then sell it, or you can make money in trading if you sell something and then you sell it at another price point. More on this later in the video. And this isn't anything new. Us humans, we've been actually trading things for thousands of years. I'm talking about back in the day before even money was a thing. We were exchanging cattle for wood, or we were exchanging wood for some fish. Some people had goods that other people didn't have, so we were trading and exchanging one thing for another. Just in different amounts where one person was gaining and so was the other person. So it was an equal exchange because both the people had to do it. One person needed fish, the other person needed wood. One person needed the wood for fire, the other person needed fish to eat. And if you have an excess of each, instead of pretty much you're not using it, you exchange it for somebody else for something that you need. So now in Forex trading, we're obviously not trading fish for wood. We're trading one currency for another currency. For example, the euro being traded for the US dollar, the US dollar being traded for the Great British Pound. Have you guys ever gone to the airport and as soon as you get off of the plane, you see these big exchange money spots that you can pretty much go to, and if you're in a different country with a different currency, you can exchange $100 for $100 of that currency's actual physical dollar. We have all actually participated in the currency exchange participation, and this currency trading happens every single day. I'm talking trillions of dollars. Yes, trillions, not millions, not billions, trillions of dollars that are being exchanged every single day. To have the exact number, it's actually $6.3 trillion is moved in the market every single day. So when you're trading the foreign exchange markets, you're trading one currency for another, but you're not actually buying currency tangibly, and you're not going to get this money in your bank account, or you're not going to hold it in a reserve account or in a different exchange. You're not doing any of that. You're simply betting if price will be going up or if price will be going down. You're essentially betting that the currency will get stronger or weaker versus the other currency. And the way that this works is by fundamentals. It's by the government, by the interest points of that country, by the banks behind that country and their funding, by the economy of each and every country. And if the country gets stronger than another country, that currency will rise, making it stronger than the other currency. So there's a spread there that it will go up in value and you make money on that spread. And let's say if a currency gets weaker than a different currency, then there's a spread that you can also make money on that as well. So for example, let's say that the US has had a recession and the euro is actually in a booming market. That means that the US dollar is going down and that the euro is going up. This is where you would want to buy the euro and where you would want to sell the dollar, because the market is clearly bad with the dollar. So you want to put sells in that the dollar will go down, and you want to put buys in that the euro will go up because it is doing better than the dollar. It's almost a win-win scenario because the fundamentals are driving price down for the US dollar and driving it up for the euro. Now, bear in mind, you're not only just buying the euro or you're just only selling the dollar. You can't do that. You have to bet on a currency pair. What is a pair? Well, it's two things. It's like when you have a pair of shoes, you have your left shoe and your right shoe. If you have a pair of sandals, you have your left sandal and the right sandal. So when you have a currency pair, you have one currency pair and then another currency pair. And what they're doing is they are together battling each other. Who gets stronger than the other? Who's driving price up and who's driving price down? So for example, let's use Euro USD, which is the most known pair in the whole entire foreign exchange market. It is the most traded currency pair in the whole entire market. It has the most volume and the most movement, meaning that there's more opportunities and how you can actually capitalize off of it, but more on that later in this video. So when you're actually trading the foreign exchange market, you have to trade on a currency pair, Euro USD. If you were to buy Euro USD, you are betting that the euro is going to get stronger than the dollar because the euro drives price up. And if you were to sell Euro USD, you are betting that the dollar will get stronger than the euro. And that is because in the Euro USD pair, the euro is the base of the currency pair, and then the USD is the quote. So basically the euro is what drives the price up, and then the USD is what drives the price down. So if you see the price going up, that means that the euro is getting strong. And if you see the price going down, that means that the USD is getting strong. So if you want to bet on the dollar getting stronger, you have to sell Euro USD because the US dollar is going to get stronger than the euro. And if you want to buy Euro USD, you are betting that the euro will get stronger than the dollar. And this works for all currency pairs across the market. For example, GBP USD. It's the Great British Pound versus the dollar. So if you buy GBP USD, you are betting that the pound will get stronger than the dollar. And if you are selling GBP USD, you are betting that the dollar will get stronger than the pound. And in the foreign exchange market, there's thousands of pairs. I'm talking literal thousands. Like you can have the US dollar against the Mexican peso. You can have the Mexican peso against the Russian dollar. And that is the beauty of this market. There are so many different types of opportunity because there is so much more money being moved than the stock market, than the futures market, than even the crypto market. There is $6.6 trillion being moved every single day because this is a market of the whole entire world, of all the currencies in the world combined in one single market. Compared to the New York Stock Exchange or US 30, you're only dealing with the companies inside of the United States, which can only be so big. So that is pretty much a very entry level of what Forex is. Now, there is many markets out there like futures, commodities, cryptos, options, and there's great opportunities there, but nothing compared to Forex. So now let's actually dive deep into actually how this market works and how you can learn everything you need for you to be able to go battle this market every single day. So now that you've seen that there's different types of currencies that you can actually trade all around the world, now there's actually different types of formats that you can trade. There's different types of way on how you can approach these different types of currencies that they all move very different. So to begin with, you have scalp trading, which is known as the lower time frame traders. These are the traders that have the faster movements, that they're in the market a lot less time. They have a higher win rate, but a lot less of a risk to reward. These are traders that usually are kind of stuck in front of the market the majority of the day or the majority of the night, that they have to dedicate hours sitting in front of the computer to just find one little good opportunity because they're only in the market probably within 1 to 2 hours of the market movement, which they can either be winning very fast or losing very fast. And some scalpers can either enter 1 to 3 trades every single day in order for them to make some money or just make back losses from the previous day, because the majority of the scalpers will lose the majority of the time because they're taking a lot of trades constantly. And scalp trading is actually the most attractive type of trading that beginners kind of approach to it because they just passionate about trading and they want to be in front of the charts as much time as they can. So they approach scalping thinking that's going to be the best way for them to make money. Next, it leads me to day trading. So I'm sure we've all heard the term, oh, he's a day trader, or I know a day trader. Well, it's actually a very common term because it's what the majority of the people that work a 9-to-5 attempt to do. Because for you to be a day trader, you pretty much have to be in front of the markets while you're in a job. So people kind of treat it as their side income. And day traders are usually in front of the markets a little bit less time than scalpers, but they are definitely taking a lot less trades. They would be taking maximum 1 trade every single day, because anything more than that, you fall into the category of scalping. And day traders are a bit more selective when it comes to the trades, and their trades can last anywhere from 1 to 3 days to play out. Unlike the scalpers, that their trades can last anywhere from 1 to 2 hours. So day trading, your trades are actually being held 1 or 2 days compared to scalpers, which is a little bit of a time. Next is going to be swing trading. So swing trading is actually a approach of the market where you are swinging the market, meaning you're just chilling. You're going to be in maybe 1 position a week, maybe 2 positions a week if you find a good probability trade, and you'll hold it throughout the weekend. So you'll be in the position for anywhere from 4 to about 8 to 10 days. And these positions usually run a lot longer, giving you a lot more profit. And you actually have to do a lot less work. You're probably in front of the markets for 1 to 3 hours every other day. You don't have to be involved in the market that much, because as soon as you enter a trade, you're pretty much letting your trade ride until it goes in your direction or against you. But swing traders are taking a lot less trades, but they are risking a lot more compared to the day traders and compared to the scalpers. And swing traders usually tend to have the highest win rate because they're being very, very selective on the type of trades that they take, because they're only taking anywhere from 1 to 2 trades a week. And then next is going to be position trading. So position trading is a trader or investor that pretty much enter a trade with a long-term vision. They want to be in the market for anywhere upwards of a month, and they are not looking to liquidate their position anytime soon because they're treating it as a investment, as a position that they're entering in the market. So they're prepared to be involved for about 1 to 2 to 3 months to just simply have their trade get as much profit as it possibly could be. And position traders or investors, they'll probably take 1 to 2 trades a month, if any. Usually they stick to 1 trade a month because they're looking at the market long term. They're not looking to have any short-term gain, and they're looking to minimize their losses as much as they possibly can. And investors and position traders are actually the ones that lose the least, because even if their positions go into a loss, they're going to continue to hold it long enough until it goes into profit. And if you hold a trade long enough, it will go back into profit. So as you can see, every single format of trading actually scales up on the amount of time that you're actually holding a position. A scalper is involved in the market anywhere from 1 to 2 hours a day. A day trader anywhere from 1 to 2 to 3 days in the market. And you have a swing trader where it's anywhere from 4 to 8 to 10 days. And then a position trader where it's upwards of a month. So every single different type of format in trading, they are actually holding their trades longer, but they're actually taking less trades. So as the formats, they scale, so does the time they hold the trade, but the amount of trades they take is a lot less. And all of these different formats you can actually apply to all of the markets. You can apply it to foreign exchange trading, to commodities, futures, options, crypto, everything that has pretty much a chart with candlesticks that go up and they go down. But the best one, and the one where I've had the best experience and the most success, is going to be forex trading. That is because it offers the best things that no other market can offer. It has 24/5 access, meaning you can trade Monday through Friday, any hour out of the day. So if you work a job, you can trade when you get out of your job. If you're up late at night, you can trade late at night. If you're up early in the morning, you can trade early in the morning. Compared to, let's say, options or stocks, you can only trade 9 to 5, which kind of sucks, because if you have a job, you can't get involved in the market. You're simply limited to what you can actually do in the market. The next reason why it's my favorite and why I got involved is because the entry barrier. For you to get started in Forex trading, you can start with as little as $100, or compared to the stock market where your entry barrier is going to be $25,000 as your minimum first investment. And I don't know about you, but when I first started trading, I did not have that kind of money, so I simply couldn't get involved. Another reason why it's the most reliable is because you're literally trading money. It's impossible that the currencies of the world simply disappear from one day to another. If that happens, we're in a big problem, but that will literally never happen. Compared to a company in the New York Stock Exchange, they can simply just go bankrupt one day or get sued and you're done for. Or a crypto can pretty much get rug pulled and all your money is gone from one day to another. The currency exchange market is here forever and it is going to be here forever. Countries run on these currencies and they need to do that for it to keep going. For that reason why the currency exchange market only gets bigger year after year. And the opportunities are going to be there forever. And adding up to that, you can actually get involved for free. You can actually test and apply the markets and try and figure out if it's going to go up or down with fake money. You can use demo money to test your skills and learn it before you actually put real money at risk. And when I was trying to get involved in the crypto market, this simply wasn't a thing. They don't allow you to use this with fake money. It wasn't even an idea. Versus in the foreign exchange market, not only can you access it whenever you want, you can actually test it with fake money, which is actually really cool. And if you don't know what demo is, it's pretty much simulated markets. It's demo. It's not real money. It's paper trading, fake trading, where they just give you fake money in an account where you can get in and pretty much go test it out. So if you want fake $100,000 and you want to test out your skills, you can do that. If you have $5,000 to put into the market and you want to test out your skills first, you can create a fake account with $5,000, which is actually amazing. So that way you can actually see how far you can get with demo money, so that when you're ready to deposit your own money, you're ready. So now that we understand how the Forex market works, a very simple way, we have to understand how can we actually execute into these markets. What platforms are required? What platforms should you look at? What platforms shouldn't you look at? And this is where it can get a little complicated if you don't have the right video. And that's why everything is inside of this video, which is going to teach you the only platforms that you're going to be needing in order to be able to execute trades in the market successfully. Now, there is hundreds of different platforms. There is thousands of different people directing you to different places, but these are the only platforms that I have personally been using for the last 7 years trading in the markets, and I have never ever needed anything else when it comes to actually executing in the market other than these platforms. And I've made probably around $10 million on just using these two simple platforms. You do not need anything else other than these two platforms that I'm going to be explaining now. And then obviously a third one that you will have to do your own due diligence on, but this is going to make sense in just a second. The first platform is going to be TradingView. So TradingView is pretty much what its name says. TradingView. You're going to view the trades on this website. This is a well-known website, I think used around about 80 to 90% of the market. And this is where you're going to be actually looking at the charts. This is where you're going to be looking at the markets going up, at the markets going down. This is where you're going to look at the markets, for example, Euro USD, how we were setting an example, GBP USD, GBP CAD, so on and so forth. Now, this platform is strictly and only to simply just look at the market. This is where you're going to be identifying if you're ready to buy or if you're ready to sell. But you will not be entering a buy or sell on this platform. It's something that the platform offers, but I personally have never used it. Neither has anybody in my community, or I've heard anybody of ever using it before. It's something that they offer, but I personally rather stick to the different options that I'm going to share with you now. So TradingView, to keep a very simple example, is just somewhere where you can view the charts. And this is a platform where you're only going to be looking at stuff. You're not going to be executing other than just things you will be drawing on the charts to identify if there's a high probability of it going up or a high probability of it going down. This is where you will be doing your charting. This is where you're going to pretty much spend, I'd say 90% of the time that you're in front of the markets will be on TradingView. Because when you actually execute a trade, it will be on a different platform. You're not going to be looking at the numbers on the screen. You will simply be looking at the charts, because what's on the charts will reflect on the numbers on the screen, which will be on your phone or your computer, wherever you decide to actually take the trade. But TradingView is simply just so you can see the charts, whether they're going in your favor or against it. And the simplest analogy that I can put is like you right now watching this video. You're watching this video to intake the information that I am giving you, so then you can learn and then you can go execute in the market. But you're not executing a trade on YouTube. You're not doing anything on YouTube other than simply getting educated and absorbing the information that I am giving you, or that you're simply watching on YouTube. And you can watch the video in a bunch of different formats. You can watch short-term videos, you can watch long videos like this one, you can watch it in theater mode, in full screen mode, or on your phone. So there's different types of ways on how you can intake this information. It's the same exact thing with TradingView. You're looking at the charts in a bunch of different ways so you can intake the information, so it can tell you if you're ready to buy or if you're ready to sell. But you're not doing anything other than just looking at the information that the market is sharing with you on TradingView. So let me actually take you to TradingView just so you guys can get a very simple insight of what this actually looks like and what to pay attention to and what to not pay attention to, because this can almost be very overwhelming at the beginning and information overload. And trust me, it happened to me, and I almost kind of got intimidated and didn't even want to look at it too much because I just didn't know what to look at. So I'm just going to explain to you right now what are the only things that matter when you log into TradingView very briefly, and then you're going to see what you shouldn't be paying attention that, because honestly there's a lot of stuff here that you really don't need. So diving into TradingView right now, this is as soon as you log in, this is what you will be seeing. You will be seeing pretty much to your top left hand side is your accounts, and you're going to see all of these tools that are randomly right here to the left hand side that you probably have no idea what the use is for. But everything inside of here is basically a tool that you can use to your advantage to chart up the chart. It's simply things that you can use to put on top of the chart so you can create an edge on the trade that you will be taking. You will not be needing everything that is in this toolbox right here. This is absolutely excessive, and you only need to use about 7 to 8 tools out of everything this platform has to offer. So if you come back here to TradingView, this is just a simple ray example that I have just showed you, and it is really not necessary at all. Within this section, you have many different types of lines. You have the info line, the extended line, trend line, horizontal line, all these lines that literally I do not use, and you will never need to use it. You will only need to use 3 things from this line section, and that is going to be the trend line, the horizontal line, and the horizontal ray. So if you'd want it, all you have to do is put a little star. When you put a star, you will notice that it will pop up on this box right here that is going to pop up in front of your charts. This is going to be your favorited tools out of all of the ones that the platform has to offer. This is so you can pretty much filter out the only things that you need, because again, there's many things in this platform that you do not need to pay attention to, and there's many things in this platform that, as of today, being a multi-millionaire trading on this platform, that I have never used, meaning you will never need to use them either. So you just simply, I'm going to explain to you what they are, and don't even get curious on learning what it is. Simply just know that it's there and know that you will not be needing it ever to become successful in trading. So moving on, you have the channel section, and this is where there's different types of channels, pitchfork, shift pitchfork, all of these things that make absolutely no sense. And all you have to do is just completely ignore it. You will not be needing anything inside of the line section other than these 3, because this has no indication to creating an edge in the market, how I have been trading for the last 7 years. Now, there's might be some strategies out there that do, but the majority of them don't really use it, especially mine. So when it comes to here on the second section, you're going to have your Fibonacci area, where there's about 10 different types of Fibonacci's, and we will be using absolutely 0 of these Fibonacci's. These are all different types of random stuff that just make your chart look weird. Like, look at this. You're going to tell me you can create an edge with this funnel or this fan, whatever this is even called? No, it simply doesn't make any sense. It's just accumulating your chart. It's putting mathematics behind it that honestly it's not needed when it comes to trading. All you will need when it comes to trading is read the price action, which price action is the chart, but we'll get into more details later in this video. I can only get into these details when you actually know how to visually see them, because you have to see them on a platform, and this is the platform that you're going to be seeing them in. So you will not be needing any of this complicated stuff. This just makes the trading complicated and very intimidating to a beginner trader, and you don't need anything inside of this Fibonacci section along with the gain section. You can simply move on to the next section, which is going to be the pattern. Because again, Fibonacci is just an equation where you can create an edge on it, but I will explain to that again later in this video. Right now, I just want to show you what the platform looks like, and I'll get into more details later, along with the patterns that we are in this section now. And the only pattern that we will be using is going to be head and shoulders. You can simply put a little star next to the head and shoulders, and you will notice how it's going to pop up over here to the top right hand side corner. We will not be using the ABC pattern or whatever this is. I've literally tried to figure out many times and it doesn't work. Other than the pattern section, we will completely avoid the Elliott waves and this section down here. This will not be needed in this trading approach, simply because it is information overload. These are all different types of indicators to read the market, and indicators, as many of you may know, or if you don't know, they don't have a high success rate because indicators are delayed. They take time for the markets to be able to have a reaction to them. So by the time you get your entry based off of an indicator or one of these tools, you're pretty much late already. So we will not be paying any type of attention to any of these different types of Elliott waves or any of these types of cycles that the market has to offer. Moving into the next section is going to be the projection section. You're going to put a star on the long position and a star on the short position. This is pretty much going to be the tool that is going to tell you if you are buying or if you are selling. Simply just take a quick look at it. It's probably this green and red box that you see all the time these traders put, but don't worry about it. More on this later in the video. Right now, I just want to get you to be very familiar with looking at these things, so when I dive into detail on every single one of them, you're very educated and up to speed, and it makes sense right away. Moving on, we will be looking at the brushes. You only have to put a star on the brush and a star on the rectangle, the path, and the eclipse. Everything else in this section you will not be needing. You will not need to be paying attention to it. Again, it's information overload. What they did was put 4 different types of arrows. You have the arrow marker, which just looks excessive. Then you have this type of arrow, and then you have this type of arrow right here, which is just another arrow. It's just different types of ways that the platform offers services for all different types of traders, which is cool because pretty much they are meeting the standards of every trader around the world, but you're only one trader. You shouldn't be looking at all the information for traders all around the world. You should only look at what's going to make sense for you. And in this video, I'm going to only show you what's going to make sense for you. So now moving on to the next section is going to be this T. So this is going to be the text and the notes section. So you want to put a little star on the T and a star on the call out. You won't need anything from the content section because this is pretty much whenever you want to write notes on the charts. You can simply just write it on the text section, or if you ever want to call out a specific section in the charts, you can just point at it and you have a call out section. These are both things that I just use to actually just have notes on the chart if you want to save it for the future, if you want to look at it when you're back testing, or if you just want to hide a message in your chart. Moving on now to this little emoji section over here. You will not be needing any of these emojis. TradingView is very clever. They literally put the whole entire emoji section of an iPhone. I don't know why they did this. I've actually never used this in my life, so I take my trading very serious. So I will not be putting any emojis or any hearts or anything on my chart. I keep this strictly to business, and I only look at the stuff that matters. This clearly does not matter. Imagine putting like a smiley face or a winky face on your chart, and then when you go show your friends your trades, they see that and they're like, what the hell? Yeah, so you don't want to focus on any of these emojis. Moving on, you have the measurement section. So you can't put a star on this because it will permanently stay on this section right here. But this is where you'll be measuring the trades, whether how long they are, how many days, the actual percentage it went up or the percentage it went down. This is the measurement tool that you can use to measure pretty much everything when it comes to the markets. And we're gonna explain later in this video how you can actually use it. Just this is what it is. This is the zoom in and zoom out. I have never used this button and I will not be using it today because I am not interested in using it. I have never used it. This is a magnet. I have no idea what this is good for. I have never used it in my life, so we will not be paying attention to this at all. This is going to be the stay in drawing mode, which I also have never used in my life, and you will not be needing it. It is absolutely pointless. Along with this lock all the drawing tools. I've never used this in my life, and I do not plan to ever use it as well, and I have not used it to this day. Moving on, this is going to be the hide all drawings. This will be a button that I use frequently when I usually have a lot of stuff in front of my charts. Let's say your charts are a little bit accumulated and they're a little bit, clogged up, and you want to clear it up just for a second. You can just click this button and it will clear it up, and you click it again and it brings all of your indication of the charts back. So again, you can't put a star in it. You can simply just click it and it will disappear your trades and tools and then bring it back whenever you need it. So we don't really use it, but it's good to know what it is. And then next is whatever the hell this is. I have no idea what it is. I've never used it. And then obviously, which is the trash section, you can simply click the trash and you can remove all 3 drawings, 1 indicator or 3 indicators, or simply if you want to delete something, you can just click it and you can click the little trash button, which will pop up right here. And then you can delete it if you want to delete 1 thing at a time. And then the last button in this chart is going to be this little star to the bottom here. So as you can see, it says show favorite drawing tools toolbar. So this is our favorite tools. So this is our favorite toolbar of our trading tools. If you want to see it, you have it there. If you don't, you simply click the star and it'll disappear. If you want to bring them back, you simply click it again and it will pop up again. So for the majority of the time, I say 99% of the time, you're going to have this star open because these are your tools that you're going to use to analyze the markets to tell you if you're interested in buying or interested in selling. So this is everything that you will be needing and what everything pretty much consists of this left hand side on TradingView. Moving on now to the bottom right of the screen, you're going to see this stock screener. I have no idea what this is. I'm going to click it just for this video, and I guess something popped up down here. I have no idea what this is. We don't trade stocks, so I will not be paying attention to this ever, and I have never paid attention to this. Same thing goes for the Pine editor. Same thing goes for the strategy tester and trading panel. I have never used any of these tabs in my 7 years of trading the markets, so there is absolutely no need for this information here. Along with this 1 day, 5 day, 1 month, 3 months, 6 month, year, 1 year, so on and so forth, you will not be needing to pay attention to this because we will be looking at the time frames that we need in just a second. So this section, pretty much all down here, sums up of nothing. We will not be using absolutely anything from this section here. Moving on to this timer right here. This is currently the timer of where I am right now. As you guys can see, it is currently 2:34 in the morning Miami time. So yes, I am recording this video at 2:30 in the morning to show you guys how hard I put my time into the value that I provide to you guys. It is currently a Friday night and I can be out partying or clubbing and having fun, but I'm like, you know what? I want to make this video for an Alex when 7 years ago he wanted to get started in trading and he wanted to know everything in one single spot. He wanted to make sure that he didn't have to go watch 100 other videos and see if he can piece everything together. So I'm making this video for you guys right now, pretty much at 3 in the morning, so you guys can just watch this one video and have absolutely everything you need to learn trading and apply it to the markets. So make sure that you listen and pay attention to the things that you need and to the things that you don't need, because I am making this so easy for you guys that you do not have to go watch any other video. Everything is going to be in this video from this point all the way to the end. I'm giving 100% dedication to this so you guys can have success like me and shorten your learning curve by years. If I would have had this when I started trading, I would have been profitable in my first 6 months. But everything happens for a reason. That's why I'm here making this video for you guys now. So now going back to the chart, this is the time zone of where we currently are. And then this is a little arrow to show the panel, which I have never used. And this is just a maximize panel, which I have never used either. I have I've never used anything of this bottom section over here. This section over here to the right hand side is pretty much information about the currency pair that we are interested in trading. Now again, keep in mind, a currency pair is a pair of two different types of currency. The example that I was setting earlier was Euro USD, which is the Euro dollar versus the United States dollar. As you guys can see, this is Euro USD, the Euro versus the dollar. This is a Forex major pair. This is currently the asking price of this market, and this is just simple performance standards that the platform has to offer. I have never used any of these stats in my favor to enter a trade or to get out of a trade. I have never used this in my life. Usually what I tend to do is just put this note section so it can just not distract me and I can write whatever notes that I want right here. But I have never used the actual information that they apply when they're showing you the currency pair. As you guys can see, moving up a little bit more, you can see all of these different currency pairs. If I were to click a different one, this is the Euro and the Japanese Yen, Euro JPY. You can see the two different countries right here. This is indicating a strong buy, and I'm telling you right now, 90% of the time this doesn't work, so there's no reason why you should ever be paying attention to it. So I skipped this little section right here, which is a metric section, which is literally where we are right now, the notes section, and then this little 3 dots. So I have never in my life ever used any of these buttons. They're absolutely pointless and they are needed for nothing in order to become successful in trading. Moving on to this bottom section right here, I guess this is an help center. I have never used it as well. And along with a calendar, which I have never used in my life when it comes to trading, especially on this platform. Moving on up here, every single one of these buttons to the top right side of TradingView is absolutely pointless. I don't know what any of them are, and I have never put any time to even knowing what they are, because from the moment that I came into trading, I just wanted to focus on what matters. I wanted to focus on what I was trading, and what I was trading is the chart. It's literally these candlesticks that are in front of you, this price that's going up and down. You're not trading all these different options. It's information overload. The only thing you will be needing is this top right button, which is going to show you your watch list, which will be the pairs that you are interested in trading. Now, what pairs should you trade? What pairs shouldn't you trade? I'm going to explain more on this later in this video, so make sure you stick around. And if you haven't subscribed, hit the subscribe button. So moving on to the top right hand side corner, this is going to be a publish button. I've never used it as well. And I have never used absolutely any of these buttons that are here to the top right hand side of this TradingView ever. There's absolutely no need for it, and I have never used it. Oh, and actually a fun fact, literally just the other day, I found out what this button did. I'm talking about like a month ago. I figured out you click this button and it just zooms into the whole screen. That's how I did that right there. That's how I literally put the whole screen on that monitor. I didn't know how to do it before. I just started clicking random buttons and that popped up. Which is kind of cool, but it's not going to make you profitable. So there's no reason to pay attention to it. So if you lose your list for whatever reason, you simply click this button and it will pop up right there. Moving on to this blue list, this is where you're going to list the pairs that you will be trading. You can have a red list, an orange list, purple list, blue list, whatever color list that you want. Currently, we are on my blue list, but this is pretty much almost like filtering out your contacts. If you want to have contacts that are your favorites, if you want to have contacts that are primary, contacts that are secondary, they're all the same in the same contact list, but some are in the priority, others are not in the priority. Well, this is the exact same thing, but instead of putting it by different sections, it's by different colors. Moving on to this different button, this is going to be the symbol section. This is going to tell you exactly what symbol you are trading, whether you're trading Bitcoin, NAS, Euro JPY, Euro USD, the list goes on. It just indicates to you that this section is the symbol. This is last, change, and change again. I don't even know what any of this stuff are. Absolutely pointless to me. Along with these 3 buttons right here. I have never used them, and I do not plan to ever use it. That's as far as my knowledge goes with it. Continuing to the middle top section of the screen, you can see how there's these 2 little arrows. So if you've ever used Excel, if you've ever used Word and you make a mistake and you want to go back, you simply just click this back section and it will go back for you to where it was previously on the chart. If you want to go forward, you simply click this button and it takes you forward to the last point where you put on the market. It's very simple and it's very straightforward. This is going to be the replay button. So I'm going to explain more on this when we actually get into the back testing section of this video, because this is the back testing button. This is where you can click it and you can immediately back test the strategy as far back as you want. Let's say if you were to want to back test to right there, the market will pretty much reset to that point, where then this bottom section will pop up where you can pretty much start playing the market and start creating, you know, an edge on the strategy that you're testing, or just to get confidence and learn how to read the charts over time. But again, more on this later in the video when I'm going to explain back testing and how you can actually use it to your advantage so you can capitalize off of it. Next is going to be the alert section. So this is when you want to place an alarm on the charts. Let's say on Euro JPY, you want to place an alarm once it crosses a certain price. You simply come here and you can just put enter, and you will notice how the alarm pops up right here in the middle of the chart because you just placed it. But again, more on this later in the video when I talk about setting these alarms at strategic points, at an area of interest, support and resistance, all of this stuff, which is going to make sense later in this video. So don't worry. So this is just the alarm section, which we will be using very frequently in the charts. Next is going to be this little square button, which I have never used in my life and I do not plan to. And then it's going to be the indicator section. So you click this button and you will literally get thousands of different indicators that this platform has to offer. And you will only be needing one. And this one I'm going to explain as well later in the video. So in here, you can pretty much just search up whatever type of indicator you want. You simply just put indicator, and it will literally show you thousands of different indicators that this platform has to offer, but you will only be need to using one that is going to make you successful. Moving on to this section right here, these are the different types of chart ways on here you can read the chart. You can read the chart on bars, candles, hollow candles, volume candles, all different types of candles or lines, or different ways how to read the price that the market is showing. And you will only be needing two, which is going to be the candlestick section and the line section. So you'll be putting a little star on that, and then instead of it popping up on your tools, it is going to pop up on this section up here. So you can see you put a little star and it will pop up in this section right here. Now, moving on to the next section is going to be the time interval. These are going to be the famous time frames that you're trading. What is a time frame? How does that work? How can you do it? What are the right time frames? I'm going to tell you more about that later in this video. This is just so you're familiar with it and you know how to look at it on TradingView. As you guys can see, there's a 1 minute, 2 minute, 3 minute, 5 minute. There's literally hundreds of different types of way you can read the market in terms of time frames, but we will only be using 7 of these time frames. We're going to be using the 15 minute, the 30 minutes, the 1 hour, 2 hour, 4 hour, daily, weekly, and monthly. So you will be putting a star next to the time frame that you will be using. As soon as you put the star, it'll automatically pop up on this section right here, and it will forever be saved as the time frames that you are using to execute on the markets. And you will not need to be using any other time frames other than these. This way, you only focus on what matters. There's so much information on here that if not read correctly, you can get confused and it can be very overwhelming and it can throw off your whole entire trading. So you only want to focus on just these time frames, and later in this video, I'm going to teach you exactly how to use them. So now that we understand everything within the actual TradingView platform, let's actually get into the charts, right? These boxes that are going up and down, because I want you guys to understand everything that this platform shows you, so then we can move on to the next platform that you should be using and what platform you should be avoiding. So let's actually get into the charts. So as you guys can see over here, kind of in the middle of the top section, you can see how we have already favorited the candlesticks, and we have favorited the line chart. So right here, this is going to be called the candlestick charts. So every single one of these boxes right here is considered a candlestick. This is a candlestick going up. This is a candlestick going down, another candlestick going down, candlesticks going up. This is basically the candlesticks representing price going up or price going down. Now, every single one of these boxes, they currently have a time frame. And this is right now the daily time frame. As you can see, the daily is highlighted in blue. So this is indicating to us that every single one of these boxes is a day. It's 24 hours in order to create each and every single one of these boxes, or also known as candlesticks. So if we were to simply flick down to the 4 hour, so we click this button right here and then it takes us to the 4 hour. You can see it right here as well. Each and every single one of these boxes is now 4 hours, meaning it takes 4 hours for this candlestick to close. And then if I go down to the 2 hour, it's literally the same thing. Every single one of these boxes is a 2 hour candlestick, meaning that it takes 2 hours from the moment this candlestick opens for that to then close. As of right now, you can't see the time over here to the right hand side corner because the market is closed right now. It literally just closed. You guys can see it down here that the market is closed. But if you were to see a little bit, like 5 minutes back and forth, you can see how when we're flickering through the time frames that you can see how much time is left in order for the candlestick to close, because this platform will tell you how much time is left. And then if we go to the W, it's going to be the 1 week. So as you guys can see, if we hover over it, it is a 1 week candlestick. So every single one of these candlesticks is a weekly candlestick. Very self-explanatory, very simple, very straight to the point, just basically explaining that every single box is going to be the time frame that you have been selected, right? So now we have this line chart. So we come here and we click this line. It's literally the same representation in price, but now you're looking at it as a form of a line. You're not looking at boxes, you're not looking at candlesticks, you're not looking at anything other than lines going up and lines going down. It is the same exact price, but it's just showing it to you in a very different way. For example, let's say you were to look at a human body with your vision. That can be the candlesticks, because you can see more details. You can see more into the specifics of the hairs, the features of a person. And if you want to see a different version of the human body, let's say you were to look through a thermal vision. So you're still looking at the same human body, but now you're only looking at the heated parts of the body that the thermal vision binoculars represent. Compared to if you were to be looking at with your regular vision, you can see everything other than the heated vision. So you're looking at the same human in just two completely different ways. Now, this is the same exact market. You're just looking at it two completely different ways. You're looking at it one with more details, which would be the candlestick market. And then if you want to look at it with less details and you just want to look at one specific thing, you would look at the line chart, which in the vision example, it would be the thermal vision. But we are going to be 99.99% of the time looking at the candlesticks or the market in this candlestick market. Same way how you look at humans, you pretty much look at humans 99.9% of the time with your regular vision. You don't really ever use the heated thermal vision. So now continuing into a little bit more detail, you guys can see all of these different colored numbers that you guys see here to the right hand side corner. This is pretty much how the platform differentiates things that I have selected in the chart. So for example, this blue line right here, it's pretty much indicating to you the live price of where this price is. This red box, it's just indicating to you that it's at that point. This black line is at this point. This blue box is at that point. It's simply just the representing of whatever you put on the chart. It just shows it here in a numerical version. For example, if I were to go to GBP CAD, which is the same exact currency pair that we're currently on, but let's say on FXCM, if you notice right here, I don't have anything on my chart. So we can go to the daily time frame and I have absolutely nothing. So let's say if I were to get this box and I were to simply just grab it and drag it like that, you would see how it would pop up over here in blue. Or if I were to come and I would put a horizontal line, see how it would pop up here in black. If I were to add a risk to reward tool, wherever this is placed, you see how it will move there. If I drag it down, you see how it will pretty much chase wherever price is going to be, depending on where that line is. It's just a different way. Instead of you seeing it visually, you can see it with the numbers. Those numbers are going to be very useful for when you're going to be entering a trade, but we still have a long way to go before you actually enter the trade. I have to teach you how to actually read the market so you can make money with it, and then actually how you can apply your entry to the trade. So this will become very useful later down the road, but I'm just explaining to you what it's for right now. So this is just a different way of looking at the objects that you place on the trading view, but in a numerical version. And then this section up here, I literally have no idea what any of these things are up here. This just simply moves every single time I move the mouse. I guess it's a different way of measuring where the mouse is in a numerical version. For whatever reason, I guess this is used for algos and stuff. I have no idea. I've never used it in my life. I kind of don't like it. It's just kind of annoying. It's always moving. And then obviously this over here is just explaining the server you're on, the time frame, and then the currency pair. And this is pretty much the seller price and then the buyer price that this market is offering. And then here, if you were to have an EMA. So right now, if you have been copying absolutely everything that I've been explaining to you, you do not have the EMA set on correctly just yet. And I'm going to be doing that later down this video, so you can have the same exact EMA that I do, which is an indicator that I use that gives me advantage and an edge over the market. So make sure you stick around so you can get the exact EMA that I use, and you can make money with it every single week how I do. So with this right here, we'll explain later down to the video. There's just a little promotions tab of what TradingView is, and that's pretty much it. Everything on this platform right here. Obviously how you read this market and how you read these candlesticks and how you read this line chart, we're going to get into a lot more detail. This right here is me just explaining to you what the platform is, what it consists of, how it works. Now after this, I'm going to explain to you exactly how you can learn and make money with these stuff. But before that, I have several other platforms that I have to show you for you to use so you can take it to your advantage, and you don't have to get lost in other platforms and waste time learning things that you simply don't have to learn. The next platform is going to be a position size calculator. This is going to be where you're going to calculate your risk. Now, if you're a beginner trader and you're watching this, please, the faster you get this, the better. Because I did not get this until about a year and a half into my trading, and I lost so much money because I was just being greedy. I was honestly just being a gambler. I just simply wanted to come in and wanted to make $1 million off of 100. And just because the opportunity is out there to do that doesn't mean it's a sustainable way to trade. And it definitely is not something you're going to do for the longevity of your journey. So this platform that I'm about to show you is going to give you a reality on how you should trade and how to calculate your risk correctly. So this platform is going to be called Position Size Calculator. So as you guys can see, I come up here to the top right corner. I'm going to put Position Size Calculator. And as soon as you click enter, you will see how MyFXBook Position Size Calculator will pop up. Now, there's many other position size calculators out there. I have tested all of them. This is the one that I like. I'm not getting paid for promo. This is a very known website. It's super famous. I just like how this platform explains it. So if you come here to this platform, you will be able to see how you can pretty much calculate your risk very, very simple. So if you were to come here and you were to create the currency pair, if you were to add the currency pair that we would be trading, let's say we would be trading GBP CAD, for example. How can you toast the currency pair? You can see it right here. You can see it right here. You can see it right here. You come over here to your position size calculator, and you would pretty much place the currency pair that you are looking to trade. So obviously we're looking to place GBP CAD. And then you would place the account currency that you have. Currently, I am in the US, so I would have to place a US based currency account. But if you are a Canadian, if you are in the Europe, you have the pound, the Japan, whatever type of currency your current account is, that is where you're going to then select the account that you simply have. Then you're going to place your account size. So let's say you have $1,000 that you want to risk in the market, right? So you have $1,000 that you have currently right now in your trading account, and you're asking yourself, how much do I risk? Well, how much are you willing to lose? Because you have to have the mindset of every single trade that you're going to take that you can immediately hit stop loss. And if your trades immediately hit stop loss, you have to be completely okay with that loss. You can't simply deposit $1,000 and bet the whole $1,000 thinking that you're not going to lose it all. Well, if you don't calculate your risk correctly, that's exactly what's going to happen. So for example, let's say out of these $1,000, let's say you want to risk 5% out of this $1,000, which is reasonably high risk, but I'll explain more later this in the video when I talk about percentage-based entries and stuff like that. So let's say you want to risk 5%. You simply come here, you put the number 5, and then the amount of pips that your stop loss is. So this is very simple. And again, we'll get into more details on this later on, but we're just going to use this stop loss for example. This stop loss, I had a total of 44 pips. This is how it is measured. And again, I'm going to get into more details, how you just use this tool and how you use this risk to reward later down the road. So don't even worry. And we're going to get into more details. For now, I'm just going to pretty much go straight to the point just so you can see how you actually calculate the risk and how this platform works. So this right here is going to be a total of a 40 pip stop loss. What is a pip? Again, I'm going to explain this later into the video. It's literally the next subject that is coming right after this. So right here, you would have a 40 pip stop loss, and then the lot unit would always stay 1. I'll explain this as well later down the video. You simply click calculate, and then boom. You're going to risk $50 on your account, and this is the unit or the lot size that you're going to use. It's that simple. All this platform does is calculate the risk that you want to place on your account, so you can place the amount of units or you can place the actual lot size that you want to bet on this trade. Whether you're going to buy or whether you're going to sell, the same exact thing applies. As you can tell right here, there's no different option that you can put, oh, if I'm buying or if I'm selling, because the risk should be the same, whether you're interested in buying or you're interested in selling. But more details on what these other different vocabularies are and how you can use them, because I know they can be very intimidating at the beginning, but they're actually very simple. So now that you understand where you can calculate your risk, if you don't understand some of the words in there, don't worry, I'm going to explain to them. You're going to get them right away. There's one other platform that I personally don't use, but I can see a lot of you guys looking for somewhere to find it, and I'm going to simply make it very straight to the point. I don't use this platform anymore because I'm a successful and profitable trader and I don't need to know these things, but I can understand as a beginner trader, it can create curiosity and you want to know where you can get a reliable source that's going to give you this information. So I'm going to give you the third platform, which is going to pretty much tell you where you can find all the fundamentals and if they're going to be good, if they're going to be strong, if they're not going to be strong. This is so you can know exactly what's going to happen in the news section of trading. With my strategy and how I trade, I don't use this at all. But at the beginning, when I was learning to trade, this platform made things so much simpler that all I had to do was just go to this one place and I would know exactly what's happening for the next 2 to 3 weeks with news articles, and it would simplify things a whole lot. So we don't trade with news. We don't need it at all. But I'm going to explain to you how you can simply learn how to read it if you're simply curious about it, and you don't have to waste time looking at other platforms and simply just wasting your time. This one platform does absolutely everything. Now, this next platform is going to be called forexfactory.com. So again, this is not a paid promo. I wish these guys would be paying me right now for this video. They don't, but they've been around for years, even before I got started. So this is Forex Factory, which is going to be the platform that will tell you exactly the news that is going to be happening in the markets. So you would want to come here to calendar of the actual Forex Factory. As soon as you come to the calendar, you would want to then click over here, this filter section. And on this filter section, you want to then only have favorited the red news articles. You can have favorited all of them, but they simply won't be effective. These are all different type of news articles that are going to come out. They're going to simply affect your trade for good or for bad. You simply will never know. I have tried to create an edge around this, and it never works because you never know what's going to come out on the news. You can have an idea, but you're never going to have absolutely any idea. There's no facts behind that. You don't know what's going to happen until the news comes out and says what's going to happen. So there's simply no reason you should be wasting your time here, but it's a good way to get educated and just simply be aware of when it's going to be coming out. So back to the platform, you guys can see how it tells you the day that the new article will be coming out, and it will be telling you the time along with the currency pair that it's going to be affected and the impact that it will have and what it is related to. As you guys can see, they have a potential forecast of what they believe it can be and what the previous time there was a news article like this was, and then the actual outcome, but the outcome only happens after. If I were to simply go to the next week, let's say if I were to click here on this week, you guys can see how Sunday, April 7th at 7:30 in the afternoon, there's going to be news about the Japanese yen with a yellow impact news, which really does absolutely nothing. It's literally somebody probably coming out and saying, hey, we're doing great, or hey, we're doing cool. It does nothing. So this is a news about the average cash earnings, which as you can see, the previous time it was 2.0%. They forecast, they believe for it to be 1.8, but the actual you don't know until the news comes out. Usually, sometimes they're good, sometimes they're accurate, but at the end of the day, it does nothing for your trades. If you notice right here, they predicted this one pretty well. They predicted this one pretty well. And these are all different types of ways that you can simply confirm if your trade's going to be going in your favor or going against it. I don't know. I don't really ever look at it. But this should be the only one-stop shop platform that you should look at if you're interested in looking at any types of fundamentals when it comes to the news. And if you notice, if you just want to focus on what matters, you simply come here and you exit it out of all of the news articles that are not the red ones, because these are the only ones that will have impact towards your trades. And this is the only section that I look at on Forex Factory. I have never used the forums, the trades, the news section within itself, the market, the broker, like none of these stuff I have ever used inside of Forex Factory. I only used to come in here to know when is a news going to come out and at what time, and does it affect my trade. And I know this might be something very direct and you might not make any sense right now, but I will circle back to this later into the video when we're actually entering a trade, when we're going to have our percentage-based entries, and there you can add this or not add it. But this is basically a one-stop shop where you're going to pretty much know that some things can potentially go down X date at X time, and they're going to be talking about X type of currency pair. Now, if you want to use it to your advantage, you could, but just know that there will never be absolutely any guarantee that you can create an edge on it, because there is clearly no confirmation until the news comes out. So far, we have 3 different types of platforms. The first one is going to be TradingView. This is where you're going to physically be seeing the actual markets. The second one is going to be MyFXBook Position Size Calculator. This is where you're simply going to be calculating the risk that you are going to determine if you're going to take the trade or not. And then the third one is going to be Forex Factory, which is going to be if you want to then use news to your advantage, or if you don't, or if you simply just want to be aware of when there's going to be news so you can avoid getting into a trade. These are the 3 platforms as of right now that I have been using for the last 6-7 years, and they have worked perfectly. Next, I'm going to be talking about one more platform, and it's the platform where you actually execute the trade. And this is going to be MetaTrader 4 and MetaTrader 5. I'm sure you guys have heard of it before, or you guys have seen screenshots of these gurus showing $25 million on a phone and all this stuff. And this is actually a very well-known platform. It's pretty much what 99% of the industry uses. It's actually the only platform I have ever used, and it is very simple and it is very straight to the point. And this is where you will actually be executing the trade. So if you analyze a trade on TradingView and you calculate your risk on MyFXBook, where do you actually plug in your trade? Well, you'll be plugging in your trade on MetaTrader 4 or MetaTrader 5. What's the difference between MetaTrader 4 and MetaTrader 5? MetaTrader 4, think of it as the iPhone 11, and MetaTrader 5 as the iPhone 15. It's simply a much bigger, updated, and newer version. I personally still use MetaTrader 4. I like it. It's very comfortable to me, and I don't have a reason to update to the next one. I simply like it. Some people like the newer one, some people like the older one. To each their own, but they both have the same exact functions. MetaTrader 5 just looks like an updated Neo version. MetaTrader 4 simply looks like the Verse version. The buttons, everything is absolutely the same. The speed, execution, everything is exactly the same. So there is a web version of this, which is for a computer. And then there is a mobile version for this, which is for your phone. This is pretty much where you see the majority of people doing it. I have only done it on the mobile. I did it 3 or 4 times online. I didn't really like it. It's like very old, but I like it on the phone better. It's very accessible. It's very straight to the point. So this, I'm going to actually teach you how you can use it when we're going to take a trade together in this video. So you have to make sure you stick throughout the whole entire video, because we're going to actually take a trade together with what I'm going to teach you. And as soon as I'm going to take the trade, then I'm going to show you how you can use the platform to your advantage. So now that we added MetaTrader 4 and MetaTrader 5, this is where you're going to actually execute onto the trade. This is where you're actually going to enter the position that you're analyzing on TradingView. Now, these are all the platforms that you are going to be using pretty much every single day. Now, there is one other platform, and that is going to be a broker. So a broker is pretty much the middleman in between you and the market. So you can't simply right now decide, all right, I'm going to go into the market and I want to trade Euro USD and put a buy. That's not how it works, because the market doesn't accept retail traders, because you need to have hundreds of millions of dollars to get involved in a $1 trillion market that moves that every single day. So that's where the broker business came in, that the big markets give liquidity to the brokers, so then you can execute smaller positions as a retail trader, which is what you are watching this video, what I am, and what pretty much 70% of everybody inside of the market. The big banks are the main ones that move the market. Retail traders don't do much. So this is where the broker is going to give you a fee for executing your trade into the market. So picture you over here wanting to enter a trade. And then this is Euro USD, the trade that you want to enter. You simply can't just go from here to the market. It's not how it works. There has to be a middleman, and that is going to be the broker. So you have to go to the broker, you tell the broker the trade you want to take, and then they will execute into the market. So the way that this used to work before used to be based off of phone calls. So people would simply get on a phone, call the broker and be like, hey, execute this trade for me. This is where I want to get out if I'm wrong. This is where I want to get out if I'm right. And that's where you would see the Wall Street people pretty much, running everywhere on the phone with these paper slips, because they would have to go to the broker with the slip so they can execute the trade for you. Well, that was like 100 years ago. That's not how this works anymore. The way this works now is simply through a couple of touches on your phone, because obviously that method wasn't being super productive and it wasn't targeting the masses of retail trading. It was a logistical mission. So the way that it is done now is you simply go to a broker, you deposit your money into a broker, and when you deposit money into the broker, you simply find the currency pair that you want to take the trade with, and you execute the trade. Now, you're going to see that immediately when you enter the trade, you're going to be negative in a position. Why? Well, that's because the broker business is on a spread. In order for them to connect you from the broker to the market that you want to be trading, they charge a fee. And that fee is going to come immediately as soon as you take a trade. Simply how the industry works and how the broker business works. And the simplest analogy that I can put are like tolls on the highway. When you want to get from point A, which is your house, to let's say point B, which is going to be, let's say, the beach. In order for you to get there, you have to go through the highway. You can't just simply cross from your house to the beach. No, you have to go through the road. And in the road is going to be a toll, which you have to pay a couple of cents or $1. Obviously, depends what country of the world you're in, if you even have tolls. And this toll is going to charge you a fee so that you can get, obviously, to your location. So this is a simple example of how to understand what the broker does. Obviously, the toll does nothing for you. You have to drive yourself to the destination, but it's the cost of you having to go to the beach. Whether you get to the beach or not, you still had to pay that toll. Whether you win or not, you still have to pay that fee to the broker because they executed you into that trade that you wanted to take. Now, what broker should you use, or what broker do I use? So I am not going to recommend anybody to any broker. There's 100 million brokers out there. There's 100 million regulations. There's 100 different million everything. I personally do not want to recommend you to a broker simply because I don't want to have any affiliation towards where you put your money into. I don't want to get paid off of a code. I don't want none of that stuff. And trust me, it would be really nice for me to do that because I can easily make hundreds of thousands of dollars a month by referring you to a broker. But I rather take the more genuine route and just simply let you do your own due diligence, and wherever you decide to go, you can go there. I make my money trading, and I want nothing to do with affiliation to brokers or to any platform that I simply have no control over, especially if they're going to be receiving your money that you're going to be investing to then scale. So I'm not going to recommend you to a broker, but the simplest things that you should look for a broker is going to be regulation and reputation. You don't want to go to a broker that is just getting started, and you don't want to go to a broker that is not regulated. It is not worth it. You want to go to a broker that has regulation, so they are at least held liable if something happens. I'm sure you've seen the biggest exchanges go down, the biggest brokers go down. Imagine how that works for unregulated brokers. Those things disappear in a heartbeat. So you want to make sure that you only go to platforms that are regulated and have the best reputation possible. But if you were to literally put a gun to my neck, if you go like this, the only broker I would ever recommend, and I'm not getting paid for this at all, would be Oanda. Oanda is the most regulated platform pretty much on the face of the earth, and the only one regulated in the US. Kind of sucks because they lower your leverage and they have a lot of restrictions because they're a super regulated platform, but your money is as safe as it could get there. If you want to know more about broker, please go do your own due diligence. And if you want to then find the broker, make sure they have as close as the requirements as Oanda does. So now that we understand all the different platforms that you need, the platforms that you're going to use, the ones that you're not going to use, what platforms should you avoid? And the platforms that you should avoid are absolutely all of them that are not these four. You do not need to look at any other platform that has not to do with these right here, because they are simply extra. They have overload of information. They are unorganized. They are excessive, and you don't need them to be successful. I have tried hundreds of them, and they have been a simply waste of time and waste of energy, waste of resources, waste of money, everything. You don't need a trading journal right now. You don't need a place to track your trades. You don't need any of that stuff right now because you simply don't even know how to trade just yet. So how do you know what you're tracking is going to work for your benefit or if it's going to work against you? So you don't need any of that stuff right now. And even to this day, I don't journal or track my trades how 99% of the retail traders that lose every single month track their trades. I track them in a very different way, and I'll also explain that later into this video. But there's not going to be any other platform that you will be needing other than these four that I have just explained. So you want to avoid every platform outside of these four, simply because they're not going to do anything to your trading and make you any more successful if you were to add it to your trading system. You do not need it. I don't use it, and the thousands of my students don't use it either. So now that we understand all of that, let's talk about the different types of trading, because with the information that I have shown you, you can trade many different types of ways. And I'm not talking about technical ways or stuff with the charts. I'm talking about actual trading concepts. There's many of them, and these are the most known ones. The first one is going to be price action trading, which is going to be the charts that I have just shown you guys. It's these candlesticks that go up, that are blue and red, and the candlesticks that go down, or the line chart that goes up and down. The ones that we just explained in just a couple of minutes ago, that pretty much represents the feed price of that currency pair happening inside of the markets. This is going to be price action. This is how you can physically see where price is on real time in front of the chart, and everything that happens in the history, meaning the candlesticks that are left in the past or the lines that are left in the past. This is pretty much like the trail of where this price is headed. This is the battle in between both currency pairs, and they're leaving a trail behind when they're going up and when they're going down. And those trails you can use them to your advantage because there's patterns behind those trails. And this is the most known common way of trading, simply because it's the easiest way to spot patterns because you can literally see them. You're seeing it happen again and again and again. And you're looking at these patterns through the way of price action. Price action, technical analysis, charts, it's all the same thing. You're looking at the chart, which represents price that the market is showing you in a form of a candlestick. Next is going to be market sentiment. So this is a type that I learned very early on, and I had extreme failure like this because it's kind of a crazy trading concept, and it simply consists of you trading against the majority. That's pretty much it. And there's websites out there that can tell you where 99% of the retail traders are. And since 99% of the retail traders fail, you simply do the opposite of what they do. So if 99% of the retail traders are buying, you will simply sell. That's it. That's what market sentiment trading is. It's honestly a very high risk way of trading, and there's a lot of speculation because none of these platforms really know how many traders are in one direction versus the other. It's great assumption and it doesn't work. Obviously they get their price data and live feed from brokers and from other platforms, but how reliable can that really be? I tried it and I've heard stories and I've never met anybody that is successful with it. But pretty much what you're doing is you're trading against the retail traders, but you're not having an actual price that you are looking at. You're not looking at the candlesticks. You're not looking at the charts. You're not looking at technical. You're not looking at any of this stuff. You're just basing it off of one platform that tells you, hey, 99% of the traders will be buying tomorrow at 9 a.m. You should sell. But how do you know where to place your take profit? How do you know where to place your stop loss? How do you know if the entry is right? How do you know if you even have an entry signal? There's so much stuff that gets factored into this that simply makes absolutely no sense. And you're pretty much just trading off of an assumption of a platform, which to me had no sense. And I see no reliability and accountability for you to become successful using this source. Next is going to be fundamental analysis. So this is pretty much what we just explained just a little bit ago on Forex Factory. And this is going to be where you simply trade using the news. So some people out here, they love reading hundreds of pages every single morning, or they love being on top of what politicians are doing, and they study them and their moves and their team's campaign, and based off of what they've done in the past, they can pretty much assume what they're going to say in their next speech or what the next political news is going to come out. And they use that as a trading strategy to pretty much create an edge over the market, where they believe that they can know what these politicians and what these big news are going to pretty much post. But it kind of takes as well as a lot of assumption, and it's a lot of assumption based off of articles that you have to read that you don't know if some of these articles are reliable. You guys know that the media kind of makes a lot of stuff up all the time, and they give their own twist to the story. And I personally didn't want to have any reliability on social media that they can just spiral up the news to make it a little bit more spicy and they could get more attention, and me base a money decision based off of that. Or you simply have to read 5-6 different news articles to pretty much come with one overall decision, if it's going to be good, if it's going to be bad. You're pretty much just basing everything off of reading. And instead of you reading actual letters, why shouldn't you actually be reading actual charts, which is what the market does? By you reading fundamentals and you reading the news, you're not seeing patterns, you're not seeing anything. You're just pretty much reading what the people think is going to happen. And then you making a business trading decision based off of that. And that's what the fundamentals pretty much consist of just you reading news and base a trading decision off of that. So instead of you relying on the charts, on the candlesticks, you're pretty much relying on the news, on politicians, on social media platforms, places that direct what the news of that currency is going to be, whether you believe it's going to be good or whether you believe it's going to be bad. But same exact thing. How do you know when's the entry signal? How do you base your stop loss off that? How do you base your take profit? You can't really base it off of something like, let's say you even know for a fact that some politician is going to come out and the news article is going to mean that the dollar is going to get strong. Let's say you know that for a fact. You have inside information. Well, what do you do with that information? How do you know where your take profit is going to be if you're not physically looking at a chart? And that's why fundamental traders usually have a big struggle becoming profitable, because they also have to implement technical analysis for it to make some type of sense. So these are going to be the 3 different types of market approaches that you can decide to trade the market in. And for the remainder of this video, we're going to simply and solely only focus on price action trading, because it's what I have been using to become successful. And it's what 99% of the traders at the end of the day have to come back and trade, because you need to know where you're going to place your entry point, your stop loss, your take profit, so on and so forth. And don't worry, I'm going to get into a lot more detail on what these terminologies are. I just need you to know exactly what we're going to be learning, so you can learn these terminologies with the type of trading that we will be doing. So now comes the official first step of technical analysis and price action, which is going to be trend. And now let me just say this right now, and you guys can literally get a sticky note and write this down. The trend is your friend. The faster you know this, the faster you will become successful. And I wish I paid attention to this at the beginning. If I would have done this at the beginning, it would have saved me so much time, so much money, because I wanted to be that guy that went against the trend. And if you were to just think about this outside of trading, when you think the trend is your friend, the first thing that should come to your mind is the ocean current. If the ocean current is going east, you simply swim east. If the ocean current is going west, you swim west. If the current is going west and you want to swim east, you're gonna have a really hard time. If any of you guys have ever been out to the ocean and swam against the current, what ends up happening is that you simply don't move. You stay in the same exact pot. You stay in the same exact spot and you have no success. Well, that is exactly what happens with the market. But when you go with the current, you make money. And when you go against the current, you lose money. When you go with the trend, you make money. When you go against the trend, you lose money. The trend is your friend. This is the number 1 thing that you need to know. And it is the most important thing when it comes to my trading strategy. And it just happens to be the first thing that we're going to be talking about when it comes to technical analysis. So now, how do you identify a trending market? It is very simple. So as you guys can see, if we come over here to the chart, you can identify a trending market by looking like this. You can simply tell this is a market heading to the upside because it is clearly heading to the upside. And then you can tell this is a trending market to the downside because you can clearly see it's heading to the downside. So this right here is a bullish market. And then this is a bearish market. This is a bullish market right here. And then this is a bearish market. So bullish means buys or up. Bearish means sells or down. And this right here is consisted of different types of words that make it a bullish market or a bearish market. And this is going to be higher highs and higher lows. Let me just type it in. So I need you guys to understand these principal rules right here of identifying a trend. And this is that a bullish market is obviously buys and means that the market is heading to the upside. And this market is consisted of higher highs and higher lows, which is a short abbreviation is HH, which is higher high, and then higher low, which is abbreviation for higher low. So then a bearish market is obviously for sells and indicating that you're going to the downside. And this is consisted of lower lows and lower highs. Obviously the abbreviation for LL is lower low and the abbreviation for LH is lower high. Now I want you to remember it is impossible to have a bullish market without a higher high and higher low. And it is impossible to have a bearish market without lower low and lower highs. It is absolutely impossible. Same way how it is impossible to have a ocean current going east without the waves creating the crevices going east. And it is impossible that the ocean current is going west without the ocean crevices going west. It is the same exact thing. And this is how you identify whether the trend is bullish or whether the trend is bearish. Now, this is going to be very important that you understand this, because when you mark off the higher high and higher low, which I'm going to show you in just a second, you're going to be able to tell when the trend changes from bullish to bearish or from bearish to bullish. But the only way for you to be able to identify that is if you can identify the higher highs and higher lows. So let me explain. Higher high should be very self-explanatory, and that's pretty much going to be the highest high point. So that is going to be off of this point right here, and we're just gonna double click this line. We go to text and we simply just type HH inside of this box right here, which is going to be the abbreviation short for higher high. So we know that this is the higher low. And where is the higher low? Well, it's the last higher low, which is going to be this point right here. So I'm simply gonna copy and paste this line. We come here and we click and adjust as a higher low. Now we understand that this market is bullish because of this higher high and this higher low. It is impossible to have a bullish market without a higher high and a higher low. And if we were to have our bearish market, obviously the lower low would be the lowest low point, which is this one right here. Simply double click it, come into the box, and we're going to put lower low, which is the abbreviation for right here. And then for the lower high, we're just gonna copy and paste this line, put it at the last lower high, which is at this point right here. And we're going to put lower high because it's the last lower high. Now, obviously I'm gonna explain now how to identify these points and how it gets a lot simpler. But so you have an idea is picture the last move of the market as the last wave before it hits the shore. That is where you can start counting the amount of waves that the ocean is showing you within the vision that your eyes can see. So if I were to simply come over here and show you in a picture example. So as you guys can see in this image right here, the last wave before hitting the shore would be this one right here. And you can pretty much count the following waves that are going to be hitting the shore. So this is the first wave, this is the second wave, this is the third, and then this is the fourth wave. So this wave right here has the highest point of the wave, and then it has the highest low point of the wave. This is where you can pretty much measure and identify how close the wave is from hitting the shore and how close the wave is from the last wave. It's a way for you to tell where is the highest point of the wave and where is the highest low point of the wave. Obviously in this example of the market going to the upside, and then we just simply flip it over vice versa for it heading to the downside. So we know that this is the closest wave to hitting the short. So when we go back to the charts, this is the closest market structure trend to being at the live price. So now that we understand that it is impossible to have a bullish market without a higher high and higher low, and it is impossible to have a bearish market without a lower low and lower high, let's just remove this, right? So we can focus on what matters, which is the trend. So let's say this market creates something like this, and it does this. Well, this means that this market has clearly now created a new higher high. So we have to adjust our higher high to the new highest high point. And in the higher low, we have to adjust to the newest higher low point, which is going to be this point right here. And then this market can pretty much do this forever as long as it continues to go to the upside. And this market will remain bullish as long as we remain within the higher high and higher low. Meaning this market is bullish permanently forever until we are above the higher low point. The moment we close under this line and the market does this, we have now shifted the trend of the market. So now this market is no longer bullish. Now this market is bearish. There has been a change in the trend. There has been a change in the current. I'm sure we're all familiar when we've been at the beach. Sometimes the waves are coming to the east and sometimes the waves are going to the west. And if you guys have been at the beach long enough, if you go early in the morning, the waves are going a certain direction because it's getting the overnight current. But then towards the afternoon, when it comes to sunset, the waves are now going in a completely different direction because the current has changed. Well, this is exactly what happens in the market. The market could be going to the upside and then it can change to the downside. And the way you can identify the trend shift is by these higher highs and higher lows. And this is how you can understand where the trend is going, if the trend is going up or if the trend is going down. And then this right here will be pretty much the same exact thing when the market is to the downside. As long as this market stays in between the lower high point and it does this market will continue heading to the downside, and this will turn into the new lower low, and then this will turn into the lower high. The moment we close above that lower high, this market has now changed from bearish to then bullish. So then this will become the new highest high point, and then this will become the new highest low point because the market trend has now shifted. And again, I'm going to get into a lot more detail in this later into the video. I want you guys to understand how to spot a trending market. Now, these trending markets are in absolutely every single pair in the market, every single time frame, everything, right? They come in all different types of shapes and sizes. Same way as the currents in the ocean. Whether you see big waves or whether you see little waves, whether you're looking at a very small section of the ocean or whether you're looking at the whole entire ocean, there is currents all throughout the ocean. There's the overall currents from the Pacific Ocean, and let's say that can be going west. But when you zoom into that section within the Pacific Ocean, you can have variations of it going east, north, south, west, however the wind is taking it at that point. So it just depends on what section you're looking at that will identify what way the current is looking. And to explain this now in the trading market, a currency pair Euro USD, which is like the Pacific Ocean, depending on the time frame you look at it, the trend can be going north, south, east, or west, or it could be going bullish or bearish, right? There's no north, south, east, or west in trading. It's only going to go up or it's only going to go down. So it's actually a lot easier to